IREDA, and that's the other interesting set of numbers. It's kick-started this season by posting maybe not the most impressive set of numbers. A spike in impairments has linked to the Gensol account has dragged profitability down by 36%. Let's get in Harsh to put out the synopsis of the quarter for us. Harsh, what did you make of the quarter?
Well, I'll focus on three things. One is, of course, the provisioning, which was elevated. NPA ratios, therefore, rose sharply. Elevated provisioning, how much of that Gensol account is already provisioned for, how much is pending, and therefore will help us gauge as to what is the conservativeness with regard to which the management is dealing with this. Any other accounts as well? I believe there is one other account as well which has slipped. How much of that has been provided? What's the impact of that? So everything with regard to asset quality. How quickly does NPA ratios cool off? They've risen to 4%. How quickly do they expect that to come off will be the next big question. And the third piece is with regard to margins. It's an excellent quarter when it comes to margins because you've seen a cool off with regard to cost of funds. How much more scope is there for that is what I want to understand. Quarterly run rate of PAT was around 400 to 500 crore in the last 2 quarters. It's come off to 250 crore. How quickly does it recover? That's the final question I'd want to understand.
Let's talk about that, Harsh, with Mr. Pradip Kumar Das, CMD of IREDA. He joins in right now on the show to talk about all of this and more. Mr. Gupta, good having you. Thanks, Mr. Das, thanks so much for joining in. Really appreciate your time. I think a couple of notes that we read. Okay, sum up the quarter for us, Mr. Das, but the couple of notes that we read, both of them actually speak about this Gensol account and the need for knowing the action and the timing of that resolution. So while you tell us about the quarter, give us some specifics about this particular issue because everybody wants to know about that.
Yeah, very good morning and thank you for inviting me here. First of all, I think whole industry knows about the Gensol now, and it is nothing to do with sector, nothing to do with the lender. It is by and large, it appears so far it is purely by the promoter and their malified intent. Now, coming back to the figures, almost 50% provisioning we have made, and the NPA shooting up, as already been spoken, there is Jensol and one more also account. But whereas the provision has not gone up to that extent, when the NPA has gone up to just double figure, because this other group account was affected by the Andhra government's decision of EPA degeneration, revising the tariff and all, which they had taken a stay in the High Court, and the provisioning was there since 1920. Only it was not classified under NPA because of the High Court order and all. The group probably, they have gone to the higher court or double bench, something like that. So anyway, as far as provisioning is concerned, with the other group, we have already done the enough provisioning that is not going to impact our bottom line at all. And as far as resolution of this is concerned, in Jensol, we are the first lender who approached to NCLT. We wanted the IRP and RP to be in place so that we can take stock of our assets. These assets are particularly the asset which need to have faster action because vehicles. And if you see that typically the vehicle life, normal body life is 10 years and the battery life is 6 years in case of an e-car. And we have finance for 5 years. And some of our loans for 3 years have been repaid and some are 2 years repaid. On an average, 50% has been repaid. So balance period 2.5 years. Battery life is still some, on an average, 3.5 years is there. If you take out this 6 months of delay slack period, and once the IRP takes over and RP takes over the control, and since this business model is having no problem in it, only promoter related issues, so we are confident things can be sorted out. What has been provisioned, we may not have to keep in our book in the time to come.
Okay. So
second, the other group is in pipeline for resolution that I cannot divulge now. And we are confident to sort out maybe within this year.
But within this year, you reckon it will get sorted out? Okay. Okay. Just one quick follow-up to that, sir. So did I hear you say that 50% of this Gensol piece has been written off already, which means the other stays as of now? Hopefully you recover and hopefully resolve this, but 50% has been written off, not the entire thing as yet, right?
First of all, right that you said written off. It is not written off. It is only provisioning. And if you connect with written off, let me touch one point, which is very critical. Good that you have touched this word. In the history of IREDA, cumulative written off is only 135 crore. when we have financed 1.62 lakh crore in last 38 years. So that speaks that account can become NPA, but it is essentially doesn't turn into written out as far as IREDA lending.
Mr. Das, I just want to lay out a point here. So you run an exceptional good company. Nobody's doubting that. But you must understand our inquisitiveness, because almost everybody that we talk to and all the notes that we read want to know about this piece, and hence the entire clarification needed around this piece. So that's why I was probing that, guys.
Right. So
thank you very much. That is a right word which you used. That will give a lot of clarification, because the analysts probably are not aware of it. That 38 years, 1.62 lakh crores of financing, that to handling new and emerging one, and still only cumulative write-off is 135 crore.
Fabulous. I mean, that's commendable what IREDA has done for sure. And therefore, kudos on that. But let's get the other pieces going. Yeah.
So Mr. Das, okay, you've mentioned about the provisioning that you've done for Gensol so far, 50%. What's the quantum which probably could be, you could have to provision in the remainder of the year for Gensol, number one? And two, are there any other risks that come up in terms of your asset quality in FY26?
First of all, if you see, we have almost 76% asset risk-free category, which is traditional area and state loans, government loans. Remaining 24% where we have the emerging one, where the risk factor is there. And we have fairly loaded the risk premium while financing to these assets. So therefore, we do not envisage very severe impact on our bottom line with respect to any new provisioning and all. Coming back again to Jensol, as you said that 50% provisioning we have made, I have already said that. As I said, the IRP has already been appointed by the NCLT. We are expecting very soon the COC meeting. IRP has already done the preliminary work and all. So once we have the COC meeting, we'll be in a better position to comment about further course of action. We are quite confident, since this is a business model in which fair amount of good economics is there. Since the promoter related issues were there, once the IRP takes control of the assets, and then we can look into alternate usage of those assets. And we believe that we may not have to have further provisioning. Rather, we believe that this provisioning may not be required. Because simply I'll explain, 10 years is car life and 6 years is battery life. Our loan was only for 5 years. And some of the loans, 3 years has been repaid, and 2 years has been repaid. So take out this 4, 5, 6 months of disturbance period, still 2.5 to 3.5 years, battery life is there in the C cars. So if it is allowed to take over and then run, then fairly no provisioning may not be required. And we do not envisage big amount of dent once the IRP takes the prompt action on this.
Sir, Tamanna here, and I just want to thank you for answering all of our questions so clearly. There is a question mark in the minds of the viewers and investors, which is why we asked this question. We have to do that. Now, having said that, you've answered in quite a bit of detail to Neeraj on Gensol. I just have a couple of more points. I understand you said this is now provisioning, it's not a write-off. But what is the core asset which you will actually see some recovery from? Because vehicles will depreciate. What is the extent of haircut that you're mentally prepared for?
See, as I told, once we take control of those assets and we have to rerun it, and I don't think we'll be allowing the ARP or RP for a longer period, because that is what we have taken the plea in the court in NCLT. And please appreciate that we are the first lender who approached to the NCLT to take this kind of decision. Whatever is there, whether filing with EOW or taking disciplinary actions, and if you want monitoring of the activities, taking the expert's opinion from Solicitor General of the country, everything we have done fastest. And we are confident these assets are taken over by the EPA. We may not have to have much provision further. Rather, whatever provision we have made, we may have to write back.
You'll write back. But which is why I'm asking, sir, and completely, you're right, you've been first off the bat to approach the NCLT. We've just seen how these processes end in the past. Resolution does become painful and sticky. And on the other hand, the underlying assets themselves don't seem to be something that can give such confidence. Just on that point, what are those underlying assets? And will they not be depreciating?
I do not think much as of now, but I think I can request you to wait for another quarter, because in one quarter we have already taken this kind of action, getting IRP appointed and getting those IRP's action. And we are going to have probably within a week time COC meeting, which I envisage, and then we'll be in much better position to talk about that. See, it is a legal process. Certain things in our control, certain things which are not. As you are talking of depreciation and all, see, 4 or 5 months of idleness of the car, whatever dent will be there, technicality that much, and would not envisage much impact will be there. And in an asset of 700 crore, and if you take some 10-20%, some maybe around 100-150 crores will be there. In a book size of 80,000 crore as of now, and which we are envisaging the way we have grown 27% of CAGR loan book, not now since 21 quarters continuously. So that way, our book is going to grow. And this kind of thing is not new to IREDA. It happened in the past. Of course, this kind of promoter related, this kind of mess up has not happened earlier.
So Mr. Das, you know, probably if you have to look at a Jet Airways as well, you know, the operational creditors probably didn't get anything. The financial creditors took a 95% haircut. So I think that is something which you will have to look at with a pinch of salt, as well as to how this pans out. Yes, there will be underlying differences from the way the assets pan out for each company, but I think we will still wait in terms of the final resolution that you get. But very quickly, on the back of the provisioning as well, if you have to look at the profitability run rate, 400 crores plus is the quarterly run rate usually that we've seen for a IREDA. It's fallen 40%. How soon do you think it will recover, and what is that normalization number that you're expecting?
360 crore is additional provisioning that is purely on account of Gensol we have done here. Okay, which was already in the market, it was known, so nothing surprising here. If you take out this case, then our profitability and other things, growth, whatever we have shown earlier, it is again a phenomenal growth we have. See, 27% loan book growth, 31% sanction, 29% sanction growth, 31% disbursement growth. So these kind of quarter to quarter growth we have been sustaining since 21 quarters. And 21 quarters is not a small time. And again, I'm saying, we have been dealing with renewable assets since 38 years. After lending 1.62 lakh crore in 38 years, if our cumulative write-off is 135 crore only, which is 0.08% of the loan book or the total assets, then what we need to talk about this? And if you compare simply our assets with NCLT's outcome, that will not be correct. Because in the past also, IREDA NCLT we have handled. After sorting out those things, our cumulative write-off is only 135 crore. So that speaks the difference of bad assets of renewable versus others. And then here, in the new and emerging one, there is not big ticket assets, small ticket assets. So whenever anything happens in a small size, not very big one. And if you look at this e-mobility, in total our book, hardly 1% is e-mobility.
Das, I have one final question. You've done with some fundraise, etc. There is a belief that you will grow 30% CAGR for the next 2 or 3 years, and you will also have net interest margin expansion over the course of the next 12 months. Are these assumptions correct? Could you quantify the NIM expansion over the next 12 months?
Already there is 40% up in the NIM, that is 3.6%.
Right.
Okay? And we are confident after getting this 54 EC sanction, we have made a rough estimate. If we can make around 5,000 crore addition to our resource book through 54 EC, because we are confident because our larger stakeholders, shareholders are retail based, and we have good connect with them. And once we connect better with this institutional category, having frequent investor meeting and all, which we have experienced in our UIP and IPO time, and I'm sure there will be fair amount of communication, and we can raise easily 4 to 5,000 crores of 54 EC. That will further reduce our borrowing cost around 12 to 15 basis points. So that will further reduce our borrowing cost, as well as NIM, what we have maintained. If we can maintain even 3.6, 3.7, that will be a good fair amount for us.
Okay, Mr. Das, we wish you all the best for the growth, the resolutions, and a lot more. Thank you so much for taking the time out and being candid with everything that we asked you.
Thank you very much.
That's IREDA.
We are renewable, you have to be pure.
Yeah.
That's the line of the interview. If you're in renewable, you have to be pure.
Yeah. Yes.
Okay, well.
Talk everything with clarity. There is no confusion at all.
No, absolutely.
Okay, absolutely,
Thank
sir.
you.
Wishing you all the best.